All right. Now, the question we kind of stopped off on that I want to go slightly back to, but I think is worth a reframe nonetheless, is across our lives, it's very likely that all of us are going to be accumulating assets in different structures. And I'll go through myself as an example for now, is like I have a business.
Yeah.
So I have a company set up.
Yeah.
I have a principal place of residence. So I have a house I own and will live in at times. We'll come back to that one. But I've got a PPR. I've got investment properties in my own name.
Yeah.
I've got investment properties in trusts.
Yeah.
I've got super, and then I've also got some shares in a trust. So like I've, even at this stage and working this out, I've got like 6 different structures.
Yeah.
And it's likely that over my life from here, I may even get more structures or add things to these structures.
Yeah.
So Ray, the question I'd love to look at here is, are there considerations that I need to make as I am accumulating things now for how this all plays out in succession planning?
Absolutely. Look, I think before you purchase or structure an asset, it is important to consider the most appropriate investment structure to use. There is no one solution or one size fits all, as we've sort of spoken about before. Considerations come down to a variety of factors, as in who's the ultimate beneficiary, what are the risks that you're trying to mitigate. The common ones that most people have, or the individuals, are their superannuation or their insurance policy. And the reason I think they are not only provide the good attractive tax benefits, but also the use of the non-lapsing binding nomination can pass on the assets to spouse, children, financial dependent, or interdependent. It's usually very hard to contest, given that it's non-lapsing binding structure. But you have to be careful. It's in the wording of it. It's a non-binding, non-lapsing, where the trustee has discretion and can be contested. The key words here are binding and non-lapsing, which makes it usually very hard to be contested.
All right, let's jump in on that, because that's a really interesting idea here. So, for example, someone could have a super fund set up right now, which is non-binding. And that would mean upon my passing in this example, that if Grant was the trustee, he would actually be able to make discretions in how things were distributed.
Exactly. However, if it was binding, Grant would not have that discretion as to how the assets would be passed down.
Right. And is there a default setting on someone's super fund, or is this very super to super?
It's very super to super, and I think this is where the key part is. Most super funds, the binding beneficiaries expires every 3 years, and to me that has never made sense. Why would you expire my beneficiary until I've chosen to do so? If something changes in my personal situation, I'll let you know. But usually what I find in most of the super funds is the fact that the beneficiary, or the binding beneficiary particularly, expires every 3 years.
Okay, so I just want to look at that. In that example, this could happen in a variety of structures. So we need to be particularly careful, not only from, I think what I was considering is more like tax. It's like, if I buy an asset in this structure, it's like, how much tax am I going to have to pay, or is Jack going to have to pay if I pass it to him in this example? Where you're really, I suppose, highlighting something here, that who the trustee is and the expiry, or if it is binding or non-binding, or auto-lapsing versus auto-renewing can play a massive role into how actually things are disputed.
Exactly.
And again, I'll use an example. I think I'm accumulating assets in my super fund that are going to go evenly to the kids. There's a non-binding part of this, and Grant, as the untrusty trustee, how dare you, Grant? How dare you? Decides he's going to favour one of the children rather than the others, and there would be nothing that could be done about that in that case, because he's the ultimate trustee here. He can make the move if he chooses.
Yes, but not in saying that the trustee will favour one over the other. It just won't be,
maybe,
unless there's a appropriate legal considerations in play. It'd be very hard for a trustee to.
Did you see that look on his face? I'm not feeling confident at this point, Ray.
I'm like, hey, Jack, if you're listening to this, mate, I like sports cars and I like apartments in cities.
So you used another word here that I think is quite interesting, as well as like contested.
Glad you picked up on that, Charlie.
Yeah, so we understand the idea of like binding and non-binding. And then the other part of it is that I've firsthand experienced this, and I can only imagine what goes on, is that when someone passes, is that all these people come out of the woodwork, or kids say that wasn't his, it was mine. He didn't own that, it was my thing.
I need the house, not the car, or like, yep.
So how are things contested, and are there things we need to consider or put in place to hedge against these contestants?
Oh, look, usually, and look, specifically with my example of working in CBA, we used to see this all the time. People used to contest wills and contest the estate at all times. People used to come out of woodworks and go, I knew Jack and I'd like to make a claim on the estate, or he owed me money, so I'd like to make a claim on the estate. And it usually, again, like I said before, it chips away at the value of the estate and creates a massive impact. So it is quite vital that you have the right set of structure of will and the appropriate legal documents to make sure that these are protected adequately.
Can I ask a question? Did anyone actually successfully claim anything? Did people come out of the woodwork and get assets, or is it just unfounded?
I look, again, I wasn't privy to that while my time in the bank, but I'm assuming there would have been. There would have been quite a bit of people who would have successfully claimed on those assets they were never entitled to.
I reckon this would go down to like the reasonable man test. Like if you can reasonably suggest that you were owed money, like you would get the cash, and it would be no different to like liquidating a company.
Yeah.
Right. And so to this point, like if I've gone and written something down into my succession and say, here are the beneficiaries. So I might have 2 kids in this. I'm going to give this kid a little bit more than this kid because I don't know. I think they're philanthropic. If I've written that into my succession plan, can the secondary child contest that? Or is it once it's burnt in stone, it's burnt in stone, versus if it's not written in stone, that's when they can go and contest it?
Look, my understanding is that it can be contested either which way.
Yeah, wow. Got it.
So
it does not
stop anyone.
In his later years.
That's my point.
Deserve more.
That's my point. There's so many scenarios of that, which is like, well, how do you just pass it all down before you die, Charlie? That's all I'm hearing.
Look,
it sounds horrific.
The other common ones that us as advisors we use, and we get this scenario from time to time, right? Is investment bonds. And unfortunately, investment bonds aren't well understood by most people. Look, it's an asset like superannuation. It's a structure that holds assets and has its own set of rules. Investment bonds are tax-paid investments, earnings are taxed within the fund, and they are not part of your personal tax return. This is a massive benefit if you don't want to pay CGT or earnings reported under your personal name. Most importantly, the withdrawals become completely tax-free after 10 years.
Can you hold up?
I might just take the carrot, right? I'm like, what?
So can we use an example of that? And you can use Grant or I. Let's say we start buying investment bonds now. We buy an investment bond with the intent that this is an asset we want to pass on.
Yep.
Now, we would buy investment bonds out of income that's already been paid tax on it, number one.
Correct.
So it's earned capital. So, all right, I've got $1 million here. I buy $1 million investment bond.
Yeah.
Now, you just highlighted something that I want to make sure I iterate. Is an investment bond is not included in your personal tax return.
Yeah.
It also has its own set of rules on what it can hold. Think of it like a super fund. Correct. It's got different things it can hold in it versus it's not one asset type. And I imagine there's some rules around what it can and can't hold as well.
Look, most importantly, withdrawals first thing you got to think about is withdrawal becomes completely tax-free after 10 years. If your intention is to invest for 10 plus years, then your marginal tax rate's above 30%, then an investment bond can provide some pretty good hefty tax benefits. Like with superannuation, you can nominate beneficiary in your investment bond. By doing so, you can bypass the will and have the money paid directly to the intended person upon death. This can be an effective, cost-effective way of estate planning and intergenerational wealth planning, really. But because of the nature of it, it sits outside the will.
I feel like we need to do a whole episode on investment bonds now.
In my mind, I'm like, there's so many questions. And I'm like looking at the time that we've recorded. And I'm like, oh my gosh.
But that's an interesting idea in that you could buy an investment bond with the idea of passing it down to, in this example, Jack. Mm-hmm. And if more than 10 years has passed, that would be a way for him to potentially access assets that have been accumulated in a very tax-effective structure, potentially.
Rate. Yeah.
And they're just bonds.
It's
not like it's a structure. It's just bonds.
It's purely investment bonds.
Got it.
And the beauty of it is it sits outside the will. The nomination can't be challenged. And it's particularly useful if you've got a blended family or you want to leave money to a charity, you want to leave money to a non-related party or a friend where you think that it might be contested.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into creating wealth inside and outside your business, check out the full episode by clicking the link on your screen or in the description right now.